What's up, guys? Mic check.
Heard you loud and clear.
I'll try it one more time. Still good?
Yep, loud and
Cool.
clear.
What's up, Pluto? Jack's here too. What's up, guys?
Does THORChain have like a custom GM? Do we like GTC or something? Or
No, we just GM. We GM
yeah,
every
I like
day.
it.
Every day we GM. I can't think of a good one.
I wake.
Can you think of a good one that we could use?
No, not yet. I mean, GTC is about the only thing I could think, but it's like kind of not as fun. ZKGM is what the union folks say a lot. I like that one. That one's fun. The sloths do LM for lazy morning. Um, yeah, I don't know.
Yeah, I can't
How's it
think of a
going for
good
you?
one.
When was the last time we did one of these?
2 weeks ago?
I feel like it was before Binance Blockchain Week, 'cause I don't think I ever talked about it on a space yet. So that must have been like, yeah, probably like 2, 3 weeks ago, I want to say. And then I think Chris, GRC Chris and Pal from Voltisig hopped on and did one like a week or two ago.
Oh, nice.
So cool, yeah. It's been a big like last couple of months, and yeah, there's a lot of stuff to update on. So we can just kind of go through everything one by one. I mean, the biggest thing that we just haven't talked about in the space yet is the Ledger integration, because I think that was after the last space that me and Jack did. So like Ledger, obviously, like big one of the biggest wallets in the game, easily the biggest hardware wallet. THORChain's live for the last couple of weeks since the end of October, as the only decentralized swap route in Ledger Live. So basically, it means that anyone that goes to Ledger Live, like any retail user that just wants to swap between Bitcoin, ETH, ERC20s, just in their Ledger app, can easily do so. And it's been live for a couple of weeks now, and volume has been pretty insane with Ledger. They've collected a lot of fees. People have made some pretty cool dashboards around it. So if you like scroll through THORChain's Twitter feed, you'll see like just some of the dashboards and analytics around it. But volume has been awesome, and that's the whole point of the integrations pipeline and the things that we've been doing as Nine Realms, because it brings like our product, like THORChain's swap product, into users who were not using it before. Like these are people who were like in Ledger Live, just like, yeah, like I need to trade. I don't want to use a centralized exchange, and I have Bitcoin and I want to cash out. Like I'm trying to go back to USDT, and we're seeing big swaps. I'm pretty sure every day we've seen $1 million swaps, multi-million-dollar swaps, just constantly coming through Ledger. So it's been really huge, and that's like a 2-year journey to get into Ledger, from like the start of the conversations to like just you know from the beginning to actually live in Ledger serving users. Been a long journey, and yeah, we're there now and bringing organic volume into THORChain from more retail users. So super happy about that.
Yeah, and overall, just been a crazy week just in terms of volatility and swap volume, Q transaction throughput on THORChain. I think we had one, two, three, four, about the last 5 days in a row. 2 to 3 times more volume than in the previous 30 days. So definitely got a lot of traffic. I've been watching the traffic spiking on the Nine Realms endpoints. So definitely a lot of people requesting swaps, like 300,000 swap requests a day alone from Trust Wallet. So there's just a lot of people using these decentralized rails, and the architecture is keeping up and the infrastructure is keeping up. So just, and we also hit 120 validators. So we're pretty much like pushing all the limits, and THORChain is responding accordingly. So just been nice to see us be able to handle that demand. Not sure if you guys remember sort of on the last sort of mini bull run in like February and March. We had a lot of issues with like the queue and Binance Smart Chain and AVAX at one point. So I'm just glad that we got all those issues ironed out at the beginning of the year, so that we can effectively serve and meet the demands of all of these new integrations landing. So yeah, I mean, what do we got? What do we got on the docket? Do we want to talk about all the new stuff yet, or
Yeah, well, we'll
is
go with sequence. I have a whole list written out.
you got
We'll
a
just keep
list?
going. Yeah,
Great.
next, so like Ledger, obviously like super big, and plus, like I've been looking just like on some of their like forums and like Reddit and stuff like that. People are very sick of the change leads, and like I've seen so many people complain about like literally they think they're getting scammed because you put in a big swap into Changely. First off, they can't even support like multi-million-dollar swaps like THORChain does. If you look in Ledger Live, you won't even get a quote from them because they won't even serve super big swaps. THORChain can serve like pretty much any size. But you even try and do one of those swaps, and people are getting KYC, not getting their funds at all. So like not only are we like there in front of users, but we're giving them a better experience, and people are really like it. Like you go on like Ledger's Reddit, and people are like, yeah, use THORChain root because it's
Hello? Can anyone hear me?
Yeah, I can hear you. I think Tyler just cut.
Okay.
Yeah, he just dropped. Anyway, hey Pluto, how's it going, man? Good to see
Good,
you.
good, good. Yeah, hopefully he'll reconnect. I guess
Yeah,
just to finish that thought, the sex, swap providers, just THORChain's UX blows it out of the water. Just some early pieces of feedback that we have heard. The outbound delay is somewhat confusing and opaque to users. So we can work to improve that. I think that the discussion around reducing the outbound delay will pick that up again in 2025 after we've landed some of the major architectural changes that we're going through right now with app
I
layer,
yeah,
EDDSA, a bunch of that
I think
stuff.
that part of that outbound delay is network bound. So, like if you're withdrawing to Bitcoin, obviously you have a number of Bitcoin blocks, but there's a number of things as we're working on re-architecting different pieces of the bridging system that will significantly reduce that. I think one thing you could do to an easy change would be to rename that withdraw time,
Hmm.
um, because users are used to delay withdrawing on centralized exchanges too. Calling it outbound delay is better from a programming terminology standpoint, but user facing, I think withdraw might be more explanatory and help people understand that a little bit better.
Yeah, that's interesting. Um, you back, Tyler?
yes. I
He's
don't know.
back.
Was I actually muted for the audience, or maybe it was just you guys? I'm not actually sure.
I
I'm
think you
not
even
sure,
dropped.
but both Pluto and I couldn't hear you.
Yeah,
So yeah,
that's the usual for Twitter Spaces. Um, yeah, all right. So yeah, you guys are talking about outbound delay. Yeah, the past
Yeah,
couple of days we've been kind of right up against that, where a lot of swaps are getting delayed, like an hour going out, just as a security function of the network. And people have definitely been taking notice of that when we have a ton of volume.
yeah. So as volume starts to ramp up, we have to look at potentially reducing those delays. And so what we'll want is we'll want to see a nice baking period for the app layer and all the new smart contracting functions. And once we've determined some stability around that and around the new secured asset stuff, and then some of the base layer stuff, um, then we should have a relatively risk constrained system, and then we can start to think about dialing back the outbound delay. But it's been in place since the 2021 hacks. Not only as a security mechanism to be able to have the community actively managing risk and threats to the protocol, which some people have pointed out is it's not ideal. Obviously we want to have network operations be as passive as possible, and so it's something that we're working to try to achieve. But since the protocol is ever evolving, it's definitely something that we'll want to keep in place until we have reached some degree
the
of
thing is that the
ossification.
outbound delay, it protects us against the unknown unknowns, like the things that we just don't know could be an issue. Like the outbound delay will protect us against that by artificially delaying any outbound. Like ideally, THORChain wouldn't delay any outbound. It would just always, act in the way that we expect it to. But the outbound delay is there just in case that it acts in an unexpected way, that there's like some way to actually fight back. Because that was part of the learnings of the 2021 hacks, is that like there was no way to stop the exploits when they were going on. Like there was no function to even do anything. So people were just like sitting back and just watching. So yeah, just like a feature to protect us against from what we don't know we need protection against. And then like as the protocol hardens, and eventually we can dial it back until like eventually like it just signs outbounds as they're generated.
Yeah. There's another thing we want. The other thing we wanted to address was the affiliate issue, the affiliate issue where affiliate fees get charged whether or not a swap reverts for any reason. So Ledger is using a pretty tight price limit. So we often see either refunds due to not meeting the price limit because maybe the market moved, for example, on those trains with long confirmation times like Bitcoin. If the price moves against the customer in the 10-minute time it takes to confirm the inbound tool to mine and then to do confirmation counting on the inbound, then we issue a refund. But unfortunately, the affiliate fee is assessed no matter whether the swap is successful or not. So one of the things that we're trying to get out in the next release is to only assess the affiliate fee on the outbound, and so that means only on the amount of the swap that succeeded. So that was something that got raised to us by some users and integrators. I definitely think it's more fair to do it that way. I'm trying to think what else. Small swaps below dust threshold. But other than that, I mean, we've just seen just great success with the rollout of these integrations, and just more throughput, more volume. System income has been going absolutely wild. I think it was from, what was it? I don't have the numbers in front of me, but like over 500K in the last few days.
Yeah, easily. It depends if you count affiliate fees or not, but if you're looking at like what liquidity providers and node operators are earning, it's over 500K combined for the past each day for like at least the past week. Just obviously there's been like a lot of volatility in the market, so I mean volatility is great for THORChain because volatility just means a lot of people are trading and it means a lot of people are paying fees. So with all the increased volume, we've been seeing just a lot of liquidity fees come in, and it just brings us closer to getting rid of block rewards and going more towards just liquidity fees, organic fees coming into the network. Like the past week has been about 70% liquidity fees, 30% block rewards, if you're looking at it day by day, depending on the day. So I actually stood up a dashboard that you guys can check this out on Rune Tools. There's an earnings page I made. So I've just been like looking at the earnings a bit, and LP's earning the lion's share of all the liquidity fees and block rewards right now. I think around like 75% of fees are going towards 73.8% is going towards LPs and the pools right now. Like 25% going towards the nodes. So there's definitely like a lot of income going towards liquidity in the network right now, which is like one of the other big changes that's happened over the past couple of weeks, which maybe you want to dive into.
Yeah, so we reverted the incentive pendulum calculation back to the original white paper implementation, um, which basically, shifts the incentive curve back towards LPs. Since the way that we were counting secured assets and the way that we were counting effective bond, was just like it was just overly conservative, and so it was essentially saying that the system was less bonded than it really was. And so, just decided to move it back to the calculation that favors LPs a bit more, or rather disfavors nodes a bit more. So that's an example of where, you know, like we will implement things that are against the interests of node operators, and the node operators agreed to those changes. So there's a lot of people who say like, oh, THORChain node operators and governance doesn't favor LPs. This is an example of where node operators willingly gave up a lot of revenue, in favor of LPs. So I think we kind of just looked at like the numbers and the earnings of LPs, and saw that especially due to synth utilization, and honestly more so due to synth utilization. If we didn't have synth utilization, or we didn't have the savers program, this would not be a problem. Like LPs would be just cleaning up. So I think maybe it was a little, some of the conversations around like savers utilization. Sorry, some of the conversations around like LP yields, were kind of like they don't have all the like complete information. Some of them are missing a bit of context around the savers program, the lending liabilities. They all kind of like play into the overall tokenomics of Rune. But I mean, we're doing what I can. We're doing what we can. We're listening to the community. So we made the recommendation to shift the incentive pendulum, so that went in the last release, and so nodes are making about 6% APY now, and LPs are making around 30%. If you just look at liquidity, like fees and block rewards compared to principal. So that's pretty good. That's just part of our shift to make LPs a first class citizen again. And then in 2025, next year, we'll be landing the app layer, which should stimulate additional demand for secured assets, and push even more volume through the base layer LPs. And then we'll basically, like, in conjunction with community feedback. And I did see Kenton in the audience before. He's still here. He's going to be pushing. It sounds like sooner than later we could potentially start to entertain the idea of closing off block rewards, which would you say, Tyler? They're only like 25% over the last week of.
Over the last week, but over
Yeah.
time, like it'll even out. Like the really volatile days, it really shifts in favor of liquidity fees because there's just so much fees coming in on the big days, and it's just going to get bigger and bigger as we integrate in more wallets. As people keep using those wallets more and more, people are doing more stuff on chain, especially with app layer stuff. I think that like we're definitely poised to start flipping the block rewards, especially as block rewards like continue to ramp down and we continue to ramp liquidity fees up, then we can start having a conversation on either reducing or getting rid of block rewards, figuring out some kind of system around that, or just just moving towards just all organic fees. Yep.
Let's bring Kenton up, and we'll hear his sort of vision for it, because he's been one of the predominant voices of wanting to campaign to reduce the block rewards. I'll kind of give my take on it while we're waiting that. But basically, like, we all want to make Rune's tokenomics as solid as possible, so that it's an attractive asset, and it's non-volatile, and it's pegged to this the success of THORChain, its LPs, and and its users and swappers. And so I think as part of that, we have to look at, like, okay, dual LPs as first class citizens. How do we make sure that they're making a significant return on their investment, and that they're making a significant return on the risk that they're taking by providing liquidity and giving up custody of their assets to THORChain. And so I think one of those things is the incentive pendulum. We fixed that. One of those things is going to be reducing synth utilization. So there's been talk of sunsetting the savers program. Much like we've sunset the lending program, it does not mean you're going to stop. Basically, like that doesn't mean the program gets shut down. It just means much like lending, we're not accepting new loans. I think the next governance vote that we'll be looking at is to pause new deposits to the savers program, and again, all this needs to take place over 1 to 2 years. We're not gonna, just sunset something immediately. Obviously, everything would be. We have to make sure that there's a better product in place first. So we shouldn't discuss shutting down the savers program or pausing the new savers or sending the savers yield to zero to effectively incentivize people to withdraw until we have a sufficient alternative. And so that's where like order books or Rujira or App Layer savings program would come into play. So we want to make sure that we have sufficient the sufficient products and technology to be able to increase liquidity before we cut off our existing products that allow us to do that. So I think that like we're all on board with sunsetting the savers program. I think if anyone here, any OGs in the audience will remember, I was one of the first people to try to push for that. I was always pretty much anti-lending, anti-savings, just because of how it blows out the predictable token economics of Rune on the lending side, and also the leverage it creates for dual liquidity providers on the savings side. So I'm happy that the community has more or less come to agreement around that, and now it's just a matter of putting it up to a governance vote, but also making sure that we have the timing right on it. And so I think everyone has a tendency to want to do everything right now, but you have to have a plan. You have to make sure that you are doing things in order and that it makes sense and the timing is right. And so I don't think we're quite there yet with sunsetting the savers program. I'm glad we put pause on lending. But yeah, if things keep trending in the right direction for the ratio of income from liquidity fees to block rewards, then at some point, and block rewards are already ever decreasing by nature to begin with. They're a function of the size of the reserve. The more block rewards that get paid out, the less block rewards that get paid out. So it's a curve similar to like Bitcoin emissions, where eventually one day there will no longer be any emissions. That's unlike other protocols that have basically inflated the actual supply to pay block rewards. We basically set aside all the block rewards in advance in the reserve, and the amount that gets paid decreases every block. So that's just that's already programmed into THORChain's tokenomics, and it's just a matter of, okay, well, do we actually want to scale those back even more? Don't think of it as less inflation, because the token supply is already finite, and it's already, we can talk about the burn in a minute. Not only is it finite, but token supply will deflate as well. But yeah, so that's I think the gist of all of the economic and tokenomics and sort of, how they relate to the product and feature offering of THORChain. Kenton, would love to hear your thoughts on all that stuff.
Yeah, thanks, guys. So Pluto, I know, definitely remember you were against the leverage and everything from THORFi. And so even well before Kuji or Ruji was in the conversation, you would have been happy to end savers and cap it off. But now you're saying we should wait till there's a savers program on Ruji before we do that. So I'm just curious, what's changed for you, from then to now?
Yeah, I mean, I guess the problem is once you lever up the dual LPs, and once you open $100 million worth of loans on THORChain, you have to unwind that. So like when I was campaigning against these things, it was to never start them in the first place. Unfortunately, the community and the nodes voted a certain way, and the devs reacted to the will of it was proposed, it was voted on, and it was my job to implement them even if I didn't agree with them. We did that, and we've realized, okay, like savings is great. We're able to attract maybe like 10 million in exogenous Bitcoin through dual LP and 50 million through savers. So it definitely did its job in increasing the liquidity, but we've just found that that has a limit. There's a limit to how that can scale. And then you also have to do things like you have to implement protocol own liquidity in order to keep synth utilization in check when the price of assets move against the price of Rune. So this underlying philosophy that like THORChain's THORFi features only work if THORChain outpaces the price of Bitcoin, say for example, that was argued by the people who are in favor of THORFi as possibly or probably holding true. And so it's like, okay, yes, just because in the past we've seen that when Bitcoin goes up 5%, Rune goes up 10%, so then we should be fine. We should never have synth utilization out of control, and we should never have lending, positions being underwater or the protocol being in debt. But in actuality, you see, for example, right now, Bitcoin is fucking running hard against everything else. You just don't know what the markets are going to do. So to try to build a protocol around an assumption that your asset is always going to outpace the assets that you're lending or borrowing in is, it's not valid. So I think it was an experiment. We learned from it. I wouldn't say it's been a failure by any means. I mean, people have earned a lot of Bitcoin on Bitcoin through savers. It's an excellent program, but now to unwind it, you simply cannot do that overnight, and you shouldn't do it as a knee-jerk reaction, and you certainly shouldn't rush it. And you have to think through how to do it, what timeline to do it on, and you have to have a good replacement for it. So that you want to basically say like, hey, look, thanks for your business as a saver. At this time, we're going to ask people, we're basically going to pause new savers, give that 3 months, see if anyone withdraws. If they don't, then start scaling the yields down, give that 3 months. If people still don't withdraw, then you might start doing, a lottery system. You might start incentivizing people in some way. Hey, if you withdraw from savers, but then deposit it into this Ruggiero savings program, then you can earn a yield boost or something. I don't know. You have to just have a plan, because the last thing we want to do is for that capital to leave the system and not come back. You have to give people an alternative for how to deploy the capital. So we need to take the time to stand up a better product to replace savings before we shut down savings. So
I agree with you about not spooking people or encouraging them to withdraw. And I'm quite sure everyone else agrees with that. How does capping savers, like we cap lending, how does that incentivize people to withdraw? Like we're just preventing new people from adding. How would that affect existing savers?
It won't, but it's just the first step in the process towards that goal. So, before you start to decrease the yields, you have to, you just stop letting new people deposit, and then give it some time, take 3 months, then start to scale the yields, and you even can scale them by a few percent. You can do it organically over time. There can be essentially like we did with the kill switch, a 1 year period over which all the APRs on savers go to zero. That will also increase the yields to dual LPs and help to offset the impermanent loss from the synth leverage of those remaining savers. So it's just a process, like all I'm asking is that like the community not get like riled up to where they're like, we need to change something now. And it's always like, oh, we need to pass this vote right now because Rune sentiment is not bullish, and it's like it been 90 days of like unparalleled growth, and now it's been like a week of red, and it's like not just us, it's like every alt in L1 is red, and now all of a sudden it's like oh, we got to do this thing, and it's just like, guys, chill out, make a plan, and then make the governance and make the vote.
Totally, I agree. But when I read the vibe of the community and various comments and everything regarding savers, it seems to me everyone's kind of saying the same thing. Let's just pause deposits. Don't lower the yields. Don't do anything to hurt the existing savers. Let's just stop adding new ones. And for me personally, I just re-listened to the Q3 call we had on Discord, and talking about THORFi, how it was an experiment. We tried it, didn't work. Going to push it to the app layer, all that stuff. And it seems like everyone's in agreement to basically kind of stop or unwind THORFi. And then so that's on top of my mind. I just saw a few comments on Discord and Twitter, and I'm like, well, maybe there's enough will in the community to pause savers right now, like we pause lending. Again, we don't have to change the yield to savers. We don't have to try and force anyone out. Let's just pause new deposits. And I don't see how that shouldn't shock the system. It shouldn't piss anyone off. And it seems like everyone's on board with that.
Yeah, I could get on board with it too. I'm down. I mean, let's talk about the burn. Like that's a current ongoing governance proposal. It's probably going to pass. It's like 90% of the way to passing. So assuming that passes, like my whole thing is like let's just give it every economic thing that we do. Let's give it some time to bake. So it seemed appropriate to me that we revisit that discussion like a month after the burn passes.
I hear you. And full disclosure, I did not initiate that vote. I'm going along with it. And I've also commented in the past, I think we should wait until we get rid of block rewards to do it. But the reason I kind of changed mine, maybe do it now rather than later, just because everyone seems to agree. And if everyone's on board to do it now, just do it now. And it's like you're saying, it's probably not going to have nil effect, or it's probably going to have nil effect immediately. So in that regard, there's nothing to measure. Who cares if we do it now? We don't have to really check anything because it's not going to really do anything. But in my mind, it's a small step in towards getting Rune deflationary, which is a totally different conversation. But in my mind, we should try and get to that goal. And also, like, who knows with, we're all expecting system income to go up. I'm expecting system income to go up 10x 1 month, and then 10x a few months later type thing. Like that's what I'm betting on. That's what I'm expecting. And
me too. But last time I said that, people called me out.
Well, I don't know what they're here. What are you here for? Like, go buy Coinbase or Binance. Like, I'm here for the 100x. And now the Rune price may not 100x, but the system revenue will, and that burn will jack up right away, and maybe that does have an effect on the price, and that does help the Rune price go up. That does help get things going. So I'm thinking more bigger picture down the road with the burn, as opposed to, we turn it on and the next day Rune's going up. No, I agree. It's not going to happen. I do agree with the mimetic part of it, the marketing. Let people's imagination run wild. That's what drives markets. I'm joining the bandwagon on that one. I don't have a strong, that we have to do that now. I'm more if I'm going to get behind anything, it's capping savers. That's something I'd be more passionate about doing immediately.
Same. I'm pretty.
Yeah, I think the biggest thing that Pluto is saying, like, I think we're all like pretty much in agreement on what we need to do. Is more just sequencing and doing everything one thing at a time rather than doing a bunch of things at once is just what Pluto and Nine Realms team is trying to say. Just like we're all in agreement of like what we need to do. It's just actually implementing all of these different things and getting everything lined up and tracking what the effects of any single change is. So I think that like we're on the same page. We just we just want to sequence things in order that feels more comfortable rather than saying like, all right, everything needs to be done like now. Like, why isn't the vote happening right now? Like, why can't we turn it off like right now? It's there's a lot of things like flying around at once in a lot of different areas, and every single one of these systems on THORChain affects each other. So like we need to be very sure when we do something.
So that's so forgive me, my smooth brain is like capping savers today won't affect anything. The only real effect they could have is just, okay, maybe we don't get any more TVL. Maybe we don't we prevent that capital from coming into the network. But after that, how does it affect anything? Maybe you guys know better than me.
I agree that it's probably fine that we cap savers, and I think we just need to make sure that everybody's aligned, and we could do some kind of governance thing on it if if other people on the team and the community agrees. There's also like you don't want to put too many governance proposals out at once, and you get this system where there's so much things that node operators need to think about, and like you know what I mean? Like if we have all these governance proposals flying at once, it just becomes too much to even keep track of. So it's just part of the risk of like having an open governance system like this, where you can campaign for changes, but then it's like there's 5 different changes that people are asking for at once. I do agree with you that I think it would be totally fine to cap off savers right now at this very moment.
And that's totally fair to have a lot of things change at once. The other thing is that I might be ignorant of is, in my mind, it'd just be simple, like pausing lending, just one Mimir setting and done. I look through the Mimir settings and it's not obvious to me how to pause savers. Is there, like, would this require you guys to like actually change the code a bit, or would
I think you could just walk down the max
something else?
utilization, Mimir. I'm pretty sure you could do that, but that's the thing. Like, we need to double check and make sure that there's no effect. Like, you know what I mean? Like, that's the exact type of thing where, like, I'm pretty sure that you could just walk down the max synth utilization and that would stop new deposits. But we need to make sure that it's not going to affect things like people withdrawing, because like let's say there's some code path where it's like it checks that Mimir whether you can withdraw or not, then that's going to be an issue.
And that's 100%. That's absolutely fair. Totally fair. You guys are working a lot of stuff. You need the time to look at that, think about it. Because look at the min bips swap fee. We changed it to 15 and realized, we're double charging. We're at 30. None of us picked that up. So you go pause the synths, and maybe that causes a bigger problem, right? So totally get that, guys. I appreciate
exactly. Like last thing we want to do is start a vote, and then we vote something, and then it's like, oh shit, we like something is messed up because of the vote that we did, and we weren't careful enough to make sure that it's not affecting some other part of the system that we didn't think would be affected, but somehow it is, and now there's an issue.
Yeah, totally.
Especially when you're talking about a node Mimir vote, because a node Mimir vote isn't something we can walk back with just like, oh, like it's either going to need an update to change something, or it's going to need nodes to unvote something. So that's like part of the risk of like getting a consensus vote on something that we're not like 100% sure about, is like, if that happens, like we can't walk it back without like an emergency update or something like that.
Yeah, that's totally fair. 100%. Cool. Thanks, guys. Did you want me to talk about block rewards?
Let's talk about that in the burn. Let's do it.
Yeah.
I guess, for me, the simple thing is block rewards are inflation. And we just need to cut the inflation. And I'm thinking more bigger picture, like protecting us during the next bear market. during the bull market, all this stuff is fine. But it's during the bear market, as block rewards really kill us. And the sooner we can wean ourselves off, the better. And really, block rewards it's just socialism. It's just subsidizing high cost node operators. And especially node operators who don't have exposure to Rune, but just have exposure to collecting fees. They, of course, would love to keep block rewards because they'll keep collecting higher fees. During the bear market, the network has to be allowed to contract naturally. And if the higher cost node operators have to leave the network, so be it. It's just like Bitcoin mining, right? If the higher cost miners have to shut down, so be it. But that, it's like working out and resting. You have to have the yin and the yang. You have to be able to have that for the health of the ecosystem. And then especially during the bear market, that's when with block rewards, we're selling Rune at the worst time possible and driving the price down on ourselves. What's more important for the network is keeping the Rune price up and keeping the value of the bonds up, and keeping the security up, as opposed to subsidizing more node operators. So like right now, we're at our max, 120 nodes, but we're only at like 110 million Rune in the bond. And during the bear, we got as low as like 80 nodes and 80 million Rune in the bond. That 80 million in the bear is worth $80 million. With 50% more nodes, the bond isn't at 120 million right now. The bond is at what, 550 million. So it's the Rune price that has a much greater effect on the security of the network. So we need to keep the Rune price up to keep the security up, so there's room for the pools to grow. Right back in the bear market, when we're at 80 million, 80 million bond size, we're at the hard cap, and the pools couldn't grow. And despite all the yield going towards the nodes, the security wasn't increasing.
But Ken, the yield's not going towards the nodes. Only 25% of it goes to those nodes. 75% of it goes towards the LPs, and LPs
in a bear market, it would
in a bear
go
market
towards nodes because of the balance of liquidity and security. In a bear market, nodes earn more. When Rune is higher, nodes earn less.
Yeah. So we like the ideal the ideal situation for the network is either in balance or IPs overweighted to pools that were constantly over secured. And so ending block rewards, that'll help keep the Rune price during the bear market. That'll help keep the Rune price up, keep security up, and keep yield towards the pools. And
no. If you end block rewards, you're taking away half of the income from LPs. And if we're going to shut down the savings program, then you're basically just closing off options for TVL and giving other networks an in to be able to outcompete us on price. And we're already pretty neck and neck with, Maya, because Maya has a lot less liquidity, but streaming swaps have proved that you don't need a ton of liquidity to be competitive. And so they're undercutting us on their min bips. So they're earning less income as a network, but they have more competitive pricing. So at the same time, you're saying 75% of block rewards go to LPs, but we want to shut that off too. And then we also want to shut down the savers program. So you have an over-leveraged dual LPs with no incentive to provide more dual LP and no other possibility to increase the TVL of THORChain.
This is why I keep highlighting that when block rewards are less than 10% of system income. So I do not suggest ending block rewards now or today when it's half the income. Absolutely not. We're hooked on it. We're addicted. I'm saying,
how many months? Like, how many months does it have to be lower than 10% before we consider that?
That's a debate, right? I'm in my mind a few, 2 or 3, and then just we can maybe say, what so in my opinion, we're going to get, say, 10x in volume, 20x, 50x, whatever, and it's going to create a new baseline for us. That there's going to be some volume that just doesn't go away, even during the bear market. Like, we're not going back to the volumes we saw in 2022. We're going to create a new baseline. And in my opinion, that baseline will be more than enough to maintain the size of the network. And just like you said, Pluto, like the pools don't need to be super huge anymore with streaming swaps. So the network will be able to contract naturally with the natural decline in the with the liquidity fees. We don't need to keep juicing them up with block rewards. The system, let it run free, let it be wild, let it find its natural state, its natural equilibrium. Yeah.
I agree. So yeah, let's pick it up when we have seen, a few months of that, of, sustained, like the lion's share of income is from liquidity fees rather than block rewards. Because we should not make any decisions based on the last 2 weeks of data. I mean, these last 2 weeks have been a extremely tumultuous election season, pump, dump, the uncertainty, and even, leading up to and after. I know the whole world doesn't revolve around, U.S. politics, but the global markets sure seem to. So, I would love to just see kind of where we end up in the first, half of 2025 before making any huge changes like that.
Yeah, and just to be clear, the reason I keep saying we should unblock rewards is just to get it into people's minds, into their consciousness, so that we all have time to think about it, digest it, right? So when the actual time comes, I've been, the conversation, we've been talking about this for months. It's in people's brains. Like, it isn't something new out of left field. That's why I keep bringing it up, is just to start getting the community thinking about it, because it will be a big decision, right? It will be a big step. And it's something that will take time for people to evaluate and criticize and whatnot. So that's my reasoning for always, for now, talking about it, is just to get people to start thinking about it.
Awesome.
Here's some interesting perspective that, like, some stuff that I think about just as block rewards. So like block rewards, they follow a similar schedule. So it's like the Bitcoin halving, but it's continuous instead of a step function, right? So instead of every 4 years, it just goes down like a lot. It's just, a more smooth curve. So, the network started like on mainnet around like less than 4 years ago. So call it 4 years right now. That's like the first halvening is like right now, basically. Like we're just in. So like, since we copied the, more or less the Bitcoin emission schedule, we're in like, 2012 of like Bitcoin's life cycle, if you're looking at it in a comparative way. So, but that doesn't mean that we can't decide like, hey, maybe we should just have it from here and just like not even completely remove it, but we can just have it and, just wean off of it like, instead of going cold turkey off of it. But we can like, I think there's a couple different approaches you could do, but I just wanted to offer the perspective that it is like super early days. And if you do the math and kind of look at the long tail, like you look at where THORChain is going to be in 10 years. And obviously, like, I think our volume is going to be a lot higher. The entire crypto market is going to be a lot bigger in 10 years. But yeah, I mean, a lot of things are going to change, and the block rewards are going to be very low compared to today. If we change nothing in 10 years, the block rewards will be exceptionally low and continue around the same rate. Because eventually we're going to hit the point where expenses equals the income on the reserve, and we're going to kind of be at a steady state. If we just turn down the block rewards, we'll reach that same steady state, just at a higher reserve amount. So there's like a couple levers we can play with to change the way that block rewards work. I just wanted to offer the perspective, just like comparing it to Bitcoin block rewards and like where that puts us, like timeline wise.
Right on. I don't want to hog the conversation, guys. Maybe if anything else you want to ask me, I'll let somebody else talk.
Well, I have to hop in 10 minutes, so let's just try to talk about app layer stuff real quick. I don't know, Tyler, if you want to pin that tweet, I mean, that Hans posted. I know it's the audience is I mean, maybe not the best example, but as somebody who is working on this stuff day in and day out, I'll just tell you right now, this is the most excited I've been for technical innovation on THORChain in a very long time. We had to make some difficult decisions, like deprioritizing the Solana integration. But when you see what is capable with the app layer, I'm super glad that we, as a team, decided to basically just laser focus on this stuff, and kind of set everything aside for the time being. I'll tell you guys right now, the 2025 will be the year of two things. Well, three things rather. The three pillars are going to be the app layer, the chain integrations, and then the improvements to dual LP on the base layer. And we're going to knock all three of those things out of the park. We could have chosen any one of those three things to basically go first, but the reason for doing app layer is because it involves onboarding an entirely new ecosystem, an entirely new community, new developers, and it's going to take time to spin that up. As we've seen, obviously we've been working on it for about a quarter already, but we're starting to approach the point where it's real. It's real tech. I mean, I think when we went and we sat down and ideated this app layer, it was like, yeah, that sounds great. Like, let's see if we can pull it off. But we got the right teams together. We got the Ruji team. We got the Strangelove team. Strangelove just shipped the Cosmos V50 PR, and now Hans and his team on the Ruji side have a DevNet where, as you can see in this tweet, if you're able to decode that, basically what you can see is that you can call smart contracts on THORChain from Bitcoin. So you can deposit Bitcoin and call a smart contract in one transaction. And you can also, smart contracts can do anything that users can on THORChain. So they can issue message deposits, they can bond, they can LP. So if you guys start to think about what level of composability this creates in THORChain, it's honestly pretty nutty. Like, you could create a fund where you can borrow stables against Bitcoin and then convert the stables to Rune and then bond that Rune into the network. That's just one example. I mean, you could just create a smart contract that does any of these things. The first things that we're going to see are order books, perps, but it's going to expand to things like lending. We're going to have the biggest and best players in the lending market building on top of THORChain. And it's, we're the only network that can provide the settlement to native L1 assets, like Bitcoin and, basically any token on any chain as of, our big chain integration push in 2025. So I think that those developments combined with, onboarding more L1s and more chains into the THORChain ecosystem is just going to be an absolute game changer. And then on the liquidity side, letting people deposit any asset, earn yield in any asset. So the idea of liquidity zapping, that's all super awesome. That's all part of making LPs a first-class citizen. And so all of this stuff around like active yield and dual LP enhancements. So yeah, just a really, really exciting times lay ahead. And I mean, it's just awesome. We're starting to approach the finish line on just like the base layer stuff that needs to go in for app layer to be a reality. I think next week sometime we'll get that deployed on StageNet, and then hopefully we'll release the underlying architecture changes before the end of the month, and then we could be looking at seeing the first contracts on at least on StageNet. Actually, we'll probably see contract dev go up there, and we might see the first contracts get deployed on mainnet in December, but it probably won't be until January that all the UIs and stuff are ready, and the actual product launches start to take place where you can actually start to use these products on Ruji. So yeah, just super excited for that. Stay tuned. It's almost here.
Yeah. I was talking with like all the Ruji guys, Hans, Mark from Denmark at Binance Blockchain Week. They're super excited to be building on this, and they're like a great team. The Kuji guys, the Ruji team now, like they're super psyched to be building on top of THORChain, and they're very extremely confident in doing this. And everything's being shipped like pretty much at light speed. I'm pretty sure this idea started in like August, is in like, hey, we should actually like do this and get this done like right now, deprioritize everything else, do app layer. So it's being shipped very quickly. And yeah, I just want to say like the vertical stack that THORChain is building, where everything is kind of very aligned to the base layer, it's the way. Like everybody else right now is building these generalized infra platforms that are just they're L2s. Like they're just saying like here's a platform where you can build an app, but THORChain is building the vertically integrated DeFi app where everything is aligned, where you have the economic security of the network, and then you have LPs built right into the consensus of the protocol, and then you have all of these apps that are directly interacting with the unified liquidity, where there's no Bitcoin L2, any L2 or other network that's doing this full vertical integration. People are just building infrastructure for the sake of building infrastructure, and THORChain's building the vertically integrated DeFi stack, which is that's what's so exciting about Ruji Network and everything that's baking on THORChain right now. So yeah, I mean, these guys are like total chads, and can't wait to see these apps finally shipped. There's just so much stuff good. There's so much good stuff coming out of app layer and like these new acquisitions and community. So yeah, I'm looking forward to this so much. It's poised to be just the most synergistic DeFi stack that exists anywhere. So that's what I'm excited about. I don't think any other network has the capability of doing what THORChain does. So yeah, it's awesome to look forward to.
Awesome. Yeah. Okay, guys, I have to hop, but yeah, I hope you can stay and take some questions, and maybe some of the other Nine Realms guys from the audience want to jump up and speak too. But yeah, it was
sure.
awesome.
If people have questions, request. Thanks for coming, Pluto. Appreciate it. Yeah, if people have questions, you can request. I'll stay up here with Ken for a little bit. If people want to come up and chat for a little bit, I'll be here. I'll wait for people to request to come up. Anything else you're thinking about, Kenton, just in general?
Kind of put me on the spot there. Well, actually,
It's the
sorry.
burn. We can talk about the burn real quick.
Yeah, the burn. Well, I am talking about Rune becoming deflationary. I'm putting my thoughts together on proposing that, and I'll write a report on it, put it on Twitter, share it with you guys in Discord. But basically, the gist is, I think inflation is bad, deflation is good, and this 5% burn, although it may not have immediate effects today, it's a small step towards that. So it's kind of like, eating healthy or working out. Like you don't go immediately deadlifting 500 pounds, right? You start with 1 plate, 2 plate, 3 plates, right? You work your way up. You don't want to shock the system, right? You want to do things slowly, methodically. So to me, the same thing with if the will of the network is to try to go to deflation, we do it slowly, 5% now. Maybe we go to 10% a year from now. Maybe, you know what I mean? We just slowly do it. So the argument that it's not going to have an effect today is actually kind of a good one, because we don't want to shock things. We want to do it slowly. So yeah, and then JP kind of mentioned, he tweeted that if Rune is deflationary on a fixed supply, in theory the price could go to infinity. And I'm trying to think, okay, we all think that's awesome, but I'm sure there's actually negative consequences to that. And the one negative consequence I can think of is if the Rune price truly is outperforming all the other crypto, does that create all kinds of impermanent loss problems on the pools? And then capital doesn't want to stay in the pools, and the pools actually contract. So maybe Rune going to infinity isn't a good thing. Maybe Rune, should kind of find some equilibrium with the market. I don't know. But I do agree with it's best and better to have as much rune in the network as we can, because it'll make the rune price more stable. And, we've got this boogeyman of these, call it 200 million tokens sitting out on sexes and whatnot. And the argument is that, during a bear market, they're all going to drive the rune price down on us, right? So we need that rune in the network so it doesn't get dumped and it holds the price up. Well, really what they're saying is we need the growth multiple as close to 1 as possible, right? If all the rune is in network, the growth multiple is at 1. Instead of coming up with gimmicks and features and whatnot to try and encourage people depositing their rune, let's just buy it off them, right? The burn mechanism, in theory, is buying rune from weak hands. And in theory, the weak hands are those rune holders on sexes. And so instead of having that 200 million rune all find its way into the network, drive the growth multiple to 1, that would actually collapse the rune price. But if we're buying that 200 million rune through a burn and buying it through the burn mechanism and then truly burning it, we're deleting that 200 million supply. The growth multiple is still approaching 1, but the rune price is melting up. So I could see the burn mechanism as a long-term solution to getting, removing rune from weak hands. And we'll never buy it all, right? It's not going to happen. But maybe we buy 10 million, maybe buy 20 million. I mean, that could be a big difference. That can make a big impact on holding the price up. Because the other thing too, and one of the criticisms of the burn is that it's insignificant that there's $1 billion of rune is traded every day. Well, that $1 billion volume is the gross. Like when you have to look at the net number of buys and sells. So imagine a tug of war. You got 1,000 people on each side of the rope, but the flag is in the middle, just kind of barely being still. It's going back and forth, right? It's a tight race. And you walk up, and you're like, "Well, I'm just one person. Well, what can I do? There's 2,000 people in this tug of war. What is one person? What's that going to make a difference?" Well, one person on either side could make a big difference. And it's the same in the markets. If you get $1 billion of rune traded every day, that's 500 million of buys and 500 million of sells. The price is determined at the margin. And so if you guys have spent any time on Deck Screener, they got I love their little thing on the right there that shows the dollar amount of buys and sells over the day. And you can see, especially these meme coins, they can be pretty darn even number of buys and sells, but the price goes up 100% in one day. So the price is determined at the margin. And this is for any, it's not just crypto. This is all assets, all they all trade. So I would say, again, the 5% might seem insignificant on the surface, but it could have an impact on some days. It could be, could contribute. So, yeah, I don't know if that helps. Have any questions or makes sense?
If you don't mind, I'll hop in. And Kenton, I really appreciate the insight, and Cow, always appreciate the conversation. Kind of just, I guess, speaking kind of Pluto's side, since he's no longer here. And sorry, I'm walking the dog, so I'm a little out of breath. But, the incentive pendulum was just changed. And I would hate to start doing more changes before, in Pluto's words, we let that bake. What happens if we just found a perfect equilibrium where LPs are finally able to be profitable? Bond providers just lost a little bit of income, but if it's for the betterment of the network, I think they've established that they're happy with that. If we all of a sudden do a 5% burn, bond providers now earning less. Maybe that affects whether or not people want to bond anymore. Maybe these bond wars don't kick off because people are realizing they're not earning enough. So again, I'm not against the burn at all. And to your point, Kenton, I don't think it's going to make that much of a difference today. It's when our volume's 10x, 100x. So if we can all get consensus on stopping savers, again, not changing their income structure, just stopping new deposits, why don't we take advantage of that low-hanging fruit, let the incentive pendulum adjustments bake maybe even just a month or two, and then we can talk about the burn. So my point is, why rush it? We just made some significant changes, and maybe that's enough. I would hate to make another correction so soon and maybe alter what changes we already made. But anyway, appreciate all your insights, guys.
Yeah, I mean, if I was dictator up to me, I'd be like, yeah, and work on stop savers first before the burn. I agree. I'm not, again, like I said, I didn't start the burn vote. I'm going along with it, trusting the will of the majority. It's not the hill I'm going to die on, trying to get that passed now type thing. I think there's more important things. But if the majority want it, I do support it. To me, that's the beauty of. It's kind of the problem, and there's pros and cons to decentralization, right? Governance can be a real bitch, but I'm trusting the collective will of the majority to decide, and not just don't listen to me or anyone else, right? But what I hope is all bond providers and node operators are taking. Getting active, thinking about it, being loud. That's the way I view myself, being running nodes and network. I gotta say what I think. I might be wrong. People could criticize me or whatever, but I feel like I need to do that to contribute to the pool of intellectual capital. And, somewhere in the middle of all that is the correct answer, right? But for now, I'm happy. If I'm not, I'm collecting yield on nodes. I'm not worried about the nodes not growing. We don't need them to grow. We need the pools to grow. So I'm personally not too worried about that right now on the node side.
That's totally fair. And you're right. I do think, we definitely are more focused on the other type of growth. I guess the question comes in, everyone has their own set of objectives, and node operators and bond providers, I think, have a larger care about the overall health of the network, whereas just your passive rune holder might be let's burn, let's meme this, let's make as much money as I can make so I can then sell. And liquidity providers have their own set of incentives as well. So I do think there's a little bit where we should be cautious about the will of the people, knowing that the will of the people is made up of multiple different types of people. And some people just want to make as much money as they want and then sell. And some people want this network to be trading Bitcoin 100 years in the future. So I do think there's a little bit more onus, I would hope, on bond providers and liquidity providers in overall health and long-term longevity of the network itself. So I do sometimes get a little hesitant when I see all these people on Twitter or what have you in the Discord saying let's burn, and I wonder what is their incentive. And I think a lot of them are just trying to make a quick buck. So I hope that just because a lot of people are shouting let's do this, that bond providers don't just listen necessarily to the overall will of the people and have a little bit of the network's health at heart.
Yeah, totally.
I brought a bunch of people.
Thanks. I'm gonna hop off. Really appreciate it, guys.
Thanks, Bucks. Interchange Jerome, what's going on?
Hi, everybody. Can you hear me?
Yep.
Yeah, amazing. Yeah, before I ask my question, I just wanted to say that I really like this democratic process of THORChain, and I think it's one of the biggest advantages. I guess everybody's bullish on democracy, right? And awesome space. And my question is, I've seen now on Twitter often a lot of very nice analytics, and I just wanted to ask you what are like your favorite, because I don't know where they come from often. What are like your favorite analytic tools besides maybe rune tools that I already know, which is awesome, by the way.
I made root tools, which is if people have feature requests, definitely just let me know. I've been working on that for fun, and it's been I learned a lot from doing it, and I'm continuing to build new tools, so use that. Go on Flipside. Flipside's where there's a ton of community analysts and data. So there's this guy, Ray who his dashboards are posted from the THORChain account all the time because he just posts the most killer stuff. So I don't know if you can browse
Ray
on Flipside.
Like RA. Yep.
You'll
YK?
find it. Just scroll like 2 posts
Okay.
down on the THORChain handle, and you'll see it.
Okay, awesome.
He posts
Yeah.
some great community dashboards, and then even browse through the THORChain link tree in the bio, and there's dashboards like THORChain.net. There's a RuneScan, my favorite block explorer. There's some really great dashboards out there. This is like, there's a lot of people who make them. They all house them on their own places. Like THORcharts.org is another good one. There's a lot of them. So
Say again,
anyone else?
I didn't quite get that.
THORcharts.org.
THORcharts.
If you go on the THORChain link tree, you'll see a bunch of links. I should probably add some more, honestly. But yeah, flip side is where
that
like
would
all
be
the
nice
community
to
makes a
like
lot of stuff.
get that all together in one place. But you say the link tree is like the best place.
Linktree has links to all of them because people individually
Okay.
make their own dashboards, and like I made
Yeah.
Rune Tools, like someone else made THORcharts, someone else makes THORChain.net. Like there's a lot of different
Yeah.
sources.
Okay, amazing. Thank you.
Thanks. What's up, Oleg or Eridanis? Yeah.
Sorry, I'm there. Jam guys. Had a quick question. I don't know if maybe Eridanis or Cow knows the answer. Well, 2 questions. Can the app layer contracts communicate or relay a payload to THORChain's EVM routers?
For what purpose? What functionality would come from that?
Let's say I have any kind of tokenized LP, savers, order, perp, whatever on the app layer, and I want to make an EVM token out of that. Could I do a representation in a smart contract where this tokenized position on the app layer is kept within the app layer, but then I issue a tokenized receipt on an EVM chain by calling, say, transfer out and call from a specific contract? Can I communicate between the app layer and directly THORChain's kind of outbound legs on the EVM chains?
I think in order to do that, there would be some additional functionality that you need to build in, because the only way that the player can really go and call out to the router is through like an outbound, right? So it needs to be like a withdraw from something, it needs to be a swap to something. So if you're just talking about like tokenizing an LP position in the app layer and then moving it to like an ERC20 token, that sounds more like a generic message pass to the router, which currently does not exist. So
Okay.
I think it's feasible, but I think it would just be some additional work.
But if I were to do it with value, say Ether, then it could work.
I think so, yeah. I don't see why.
Okay. Great. My second question, and I want to take the opportunity, I see a couple node operators and a couple ecosystem participants. So maybe my information is outdated. So first I'll ask it as a question. What's the status on the permissionlessness, I guess, or how permissioned is the app layer? If it is still somewhat permissioned, how do I get whitelisted? And just want to raise people's attention to why we would want a fully permissionless app layer.
That's a good question. I don't know exactly the state of how permissioned it's going to be, but I think, FamiliarCow was kind of talking about this previously, is that the one benefit to having it permissioned to these smart contracts on app layer are going to have a lot of capabilities that could be dangerous to kind of allow, to the general public of developers, which kind of just changes like the security stance of the network. That's going to create, we need to be very confident that, that these contracts can't do something malicious. But what FamiliarCow was talking about before is that there's like a vertical integration of these DeFi apps, and they're directly aligned with the THORChain protocol. So having some degree of like it being permissioned makes this easier, right? Because we work with trusted parties, we work with trusted developers, and we can kind of like more control every step of the way and have these vertical integrations and these vertical apps exactly what we want them to be. That's just kind of my perspective. I don't know exactly how permission is going to be, and I think I agree. I would down the line like it to be open to everyone, but for this initial phase, I think it does kind of make sense to be like somewhat permissioned.
I think the permissioned nature of it comes from it needs to be a contract that's merged into THORnode. So it's like it needs to be included in a release. All nodes need to sign off on it. Like no one can just deploy a contract. It needs to be merged into THORnode, right? Like I don't think that you can just send code and exactly.
Yeah, that's fair. That's fair. But would the node operators hold kind of the final say on what gets merged in? I want to avoid any sort of conflict of interest. What if I want to make a competitive per protocol because I think I have a better one? Am I going to be kind of blocked just because there is already a chosen team to do a perps protocol? Or can I still make my case and raise a PR and then the nodes decide what gets in and not a certain group of developers?
Yeah, I mean, I think that would be the best way. And I think, there's probably, I'm imagining that there's going to be just like a standard security standard that like new contracts and new protocols need to adhere by. And, maybe there's an auditing process that, new protocols need to go through, and then some sort of governance process through node operators. But yeah, I mean, I would, I obviously like there shouldn't be a monopoly on this app layer, and there shouldn't be like a hand-picked group of people that are only allowed to deploy on it. So yeah, I mean, I'll definitely push for some sort of process where people can propose new protocols and get them audited and make it through. So
the way I'm envisioning this is that like we as Nine Realms just merge things into THORnode and they go into StageNet to bake, and that's kind of where the security needs to get proven out, and then nodes would need to be the ones to decide, do we turn this, because it would if it's in StageNet, that means it's in mainnet, right? It just turned off. So then nodes would be the ones to decide, do we turn this contract on or not after security? So like in my mind, that's kind of how it works, where it gets proven out in StageNet. It's technically in mainnet, but it's off. You can't use it, right? And then in order to be turned on, the nodes need to manually go and say, yes, this contract will become active once it reaches a majority, just like any other vote is kind of how it goes in my mind.
Yep, that makes a ton of sense. As a final comment, I would really like to see from node operators to kind of self-organize or push ideas forward. Security of the network is also the node's responsibility. So when I'd rather have a formalized and universal auditing process and not see talks of specific contributors saying they will pay for audit personally and choose the auditor. I think Tor nodes and the network in general should self-organize and make sure there is a universal and agreed upon auditing process, and that just everyone can kind of pitch their ideas, but no side deals, no specific auditor gets to approve this, and I get to audit this because I pay for it. Yeah, I'd really like if the network could have a comprehensive solution from ideation to deployment. I think that would be for the best of the network.
Yeah, I mean, I agree with you overall, but I do think like, there is a benefit into using one auditor, because it takes a long time to get the context to properly audit any code in THORChain, let alone, all of the THORChain stack and then code written on top of THORChain. So like there is a huge benefit to having one audit shop that has all the context to audit these contracts. And, it can't be something where like, it costs, hundreds of thousands of dollars to get it audited. But again, like it's going to reduce the cost of auditing if, an audit shop already has the context to do so.
I brought up Mark from Denmark. Sorry, I didn't see your request before. If you had anything you wanted to say about just app layer in general, or what Oleg's comments, or anything else.
Yeah, hey guys, Mark here. Thank you for the question on app layer, Oleg. I just want to pitch in and chime in here. Being one of the guys over at the app layer, Rajira side, we are certainly thinking about permissions and how permissionless we should go. I completely agree with what Tyler and Erdonis said already. There's a lot of details to work out, essentially. Right now, we have a bunch of teams from the Kujira side that we're bringing over, and that's going to be sort of training wheels. We know them. We've worked with them for many years. And with that, we're going to flesh out all these different details and get answers to questions like these, Oleg, and basically get better at having a smooth process to deploy on the app layer. What I will say, though, is that there's not going to be a monopoly for sure. The reason why we cherry-picked different teams to deploy different core dApps to the app layer is because we wanted to make sure that we didn't have an empty dance floor when we started investing all this time and effort into upgrading, enabling IBC, V50, etc., etc. So yeah, the Kujira team, the Levana team, etc., are making sure we don't have an empty dance floor from the get-go. But after that, of course, there's going to be a bunch of different competing dApps. I'm sure there's going to be multiple purse markets. There's going to be multiple trading products, order books, etc. I certainly hope so, at least. So yeah, the idea is not to have one per market only to rule them all. The analogy that we use in Rojira is sort of like when you turn on the iPhone, you have a Notes app from the get-go, but you can go on the App Store and download a ton of different Notes apps in the App Store. The same thing with the app layer. That's what we're gunning for here. So yeah, it would just take some time to weave out all the details and how we actually want to do it in practice.
Thanks, Mark. Erdonis, is there anything else? Like, I don't know, is there anything else that you wanted to just say? Any reason you requested to come up?
Not really, just hanging. Yeah, I mean, it's been a crazy integration season, obviously. So I'm kind of just like in that world right now and making more improvements to the affiliate fee flow, and then going to start building out some of the active yield stuff, which will be super exciting, and I think a huge improvement to the LP landscape. But yeah, that's kind of what I'm focusing on, and I think everything is going great, and just stoked for the progress recently.
Yeah, dude, we're killing it right now. I pinned a tweet to the top. Weekly affiliate revenue is now over 1 million. So the previous month, the previous one was 500K, which we hit 8 months ago, and the weekly affiliate revenue is over 1 million for this week. So first time that's ever happened.
Yeah, no.
So that's a lot of that is Ledger and Trust Wallet and some THORSwap in there. I think those are by far the top three. But yeah, great to see.
Yeah, I honestly didn't expect Ledger to ramp up this quickly. I thought it was going to be like over a couple months, but as soon as they hit 100% and rolled out to everyone, I mean, they're doing crazy numbers. And we are working with their team continuously to open up more routes. So I think, this is really only the beginning of the volume that we'll see from Ledger. Yeah, so I'm just, I can't believe it's finally here. I can't believe it's finally happening, and they're really just crushing it.
Can I ask you guys something? Excuse me. Sorry, excuse me. I'm curious if you have any insight with like Ledger, Trust Wallet, all the front ends. Did they have any like marketing plans? Are they just kind of like slide this out in an update, just letting people find out about it on their own, and they're going to give it some time, then they're going to promote it? Do you have any insight into anything like that?
It's a good question. I think, there was some preliminary, I don't know if you want to call it marketing, but at least tweets that came out. I think that's definitely something that we can push harder on, because I think there's a lot of ways that Ledger can push more users to it. And I think, we're 2 weeks into full rollout. I think, the team wanted to make sure everything was stable, everything worked very well. And I think that's something that we'll work on in the next couple of months. For Trust Wallet, I mean, they've done marketing here and there. They had one campaign where they did push notifications to THORChain swaps. I do think that we can do more of that stuff. Unfortunately, or not unfortunately, but just the reality of it is that all of that stuff just requires money. And so we just need to be careful about how we're spending the treasury, making sure we're doing it, things that are going to be like highest impact. But yeah, I mean, I think over the next couple of months, we'll definitely be pushing harder, especially with Ledger on marketing stuff.
Yeah, so some context here, because I've been working with the marketing for Trust Wallet, not for Ledger, also Trust Wallet, but for the Ledger's integration. So yeah, because we're doing that staged rollout, they definitely did not want to do anything besides the initial announcement before we got to 100%. Now we're at 100% rollout and things are going pretty well. I forgot to mention this. We actually have a space scheduled with them for next Thursday. It's not announced yet on Twitter, but next Thursday, which is the 21st at 11 a.m. Eastern, we're doing a space with Ledger. Hopefully, we're trying to get some special guests on, and we're hoping that'll happen, but I can't guarantee that. So we're going to be doing some marketing with them. I don't really know what people are expecting with marketing. Like really, like being in the app, people just use it, and like the marketing, a lot of it is just like directing users to use THORChain through the app, not really like, hey, go buy Ledger and download this to and not even download Ledger Live to use the swap tab. It's more just like Ledger Live has all these customers, now direct them into the funnel of swaps. Not really so much like get so you understand like kind of what I'm saying with like the marketing funnel is not like bring new users into Ledger. It's like direct Ledger users into using our Rails, if that makes sense. But we will be doing a space next Thursday with them, just for fun. So I'll try and get them. I'll actually send a message right now to get them to announce it like ASAP, and then hopefully we can get some very special guests in that we don't normally get on Spaces, just because this is a big one for us. So yes, there's marketing ongoing, but just like be aware of the angle that like the Ledger marketing stuff comes from, because it's not really it's not like we're going to be putting out like ads to get people to buy Ledger devices or something like that.
Yeah, just to be clear, I did not in any way, shape, or form imply or mean to say Nine Realms or THORChain should be marketing for Ledger or Trust Wallet. Like Ledger should be marketing for Ledger. Trust Wallet should be marketing for Trust Wallet. And so, yeah, that's not our responsibility or your jobs. It's theirs.
Well, that's the way that it works. Like Trust Wallet, they come to us and say, "Hey, give us X amount for a marketing campaign." So that's just the way that crypto marketing. Yeah, dude. Like it's actually crazy. Like being like someone that tries to coordinate these things, because I mean, you can look at the figures like what they bring in each month, and they have the incentives to do it themselves, but at the same time, like marketing is a money game. So take that what you will. That's why like it's great when Trust Wallet sends out push notifications, but at the same time, it's not our job to incentivize them to send out push notifications. They have incentive enough to do so already, just based on the
exactly. So are you telling me the Trust Wallet only sends out push notifications if you bribe them for it? If you pay them?
No, I'm saying if we want specific, like I'm saying, like I'm speaking in general, not specifically to Trust Wallet or to anybody in particular. Like if you want marketing, like you're paying for it, right? And that's like it's separate, separate deal. So like,
well, like they don't even have. They don't have to market THORChain. They just have to market themselves, right? That's the whole point. THORChain's in the background.
Like I posted one the other, like yesterday or 2 days ago. They send out a notification. Bitcoin's at like 91,000 or something. You swap it using our trust providers. THORChain's the only provider. We're not named specifically. That's not something that we pay for. But like at the same time, if you want something specific, that's like, hey, use like THORChain marketing campaign. We're giving away money to swappers. Like these are paid things. It's just the way that marketing works in this industry.
Okay, cool, gotcha. Because everybody always wants to poke the stick at THORChain and do this, do that, but like in my mind, it's the front ends. I don't see the marketing much, or I'm not. Maybe I don't. You're closer to it than me, but I would think Ledger making 1.4% on each trade. Oh my God, just take that money, put it all into marketing. Just keep
right. But are you like in Ledger Live, like what they're doing or will be doing is putting up like banners, for example, like getting people who are currently using their goal isn't to bring new users in, it's to convert their current users into users. So it's like, unless you're in those channels, like you're not like exactly seeing like what's being pushed.
Exactly.
As one example, like Ledger in particular, because that's a special case.
Cool, but I guess to summarize, they are doing some. internal marketing to their existing
exactly.
members?
Like,
Okay, awesome.
we've been working with them, and we're doing a space next Thursday. So I'll try and get it announced ASAP. Hopefully tomorrow we'll get it announced, and we'll see if we can get some special guests to come. And we'll market it, and we'll get it out there. The THORChain community is excited about it, and Ledger's very happy with our social response, because we have a very active community, and everyone's super psyched. So they love to see that.
Dude, I am too. Tell me if I'm crazy. So THORChain has 30,000 users a month right now. In my mind, that could 10x to 300,000 1 month, no problem. Do you think I'm crazy? Do you think that's out of the realm of plausibility?
I've been saying this. THORChain has 1,200 swappers a day. Do you realize how small that is?
Yeah,
it's so small. It's peanuts.
I mean, all of these apps, they have 100 million users. I mean, that's the goal, right? that is the target, and we are at an anthill compared to the skyscraper of users that these apps have. So it's up only.
That's why we can't do anything crazy like try to freaking enact that affiliate rev share thing. That would make our integrators go ape shit.
Exactly.
I agree. And for anyone listening, to put that 30,000, 300,000 number in context, Coinbase has 8 million users per month, active users per month, right? And we're trying to become bigger than Coinbase. So that's a 250x from here, right? So we have a lot of ways to go.
Yeah, yesterday's unique swapper count was less than 2,000 unique swappers. I'm not exactly sure if it counts both address. I'm not exactly sure what is behind this. On November 12th, it was almost 5,000 unique swappers, and that includes everything. So it's just so small, and that's where I really see the potential for growth, is just hitting more and more users, and that's where the integrations funnel really comes in, because that's just direct user acquisition for THORChain, and then it grows in multiples when you really think about it with the app layer too. That's why app layer is so bullish.
Can I throw in a question there? If you say different users, is if people use SwapKit, does it count different accounts, or is just one integration, one?
It's by
user,
account.
You know what I mean?
It'll look at did this person swap yet today? If yes, that's a unique address. If they've swapped already today, then that's not a unique address. So it doesn't matter what interface.
Okay,
it just splits
I
the
understand. Thank you.
Yeah, that's why my whole thing is my whole thing has always been just be as price competitive as possible. And I do think obviously yield is important for LPs, yield is important for nodes, and I think there's a lot of factors at play, as we've been talking about a lot in this space. And I think removing the synth liability is going to be a huge step forward. But the amount of users and volume that that's out there to grab, we just need to be as competitive as we possibly can be. And so I'm all in favor, pumping the yield, making sure liquidity is there, but we do need to be competitive and in the long term.
Right, which means don't count other people's money, no affiliate rev share. It means have the ability to continue to grow liquidity on THORChain to provide even more better pricing, which we have to have a good suite of LP products in place before we touch any of the existing products, which I was alluding to earlier in the space.
Yeah.
Even the stuff around the min slip, even if the goal was to jack it up to 16%, that's just doing that so quickly after we had just voted to raise it from 3 to 5 and then immediately to 15. We should be taking those discussions a bit more seriously and not getting so euphoric about we can make so much money. It's very short-sighted to do that, and we've already seen that our competitors, which didn't jack up their min slip, are more competitive on some trades than we are. So we always have to make sure that liquidity and and competitive overall competitiveness are top of mind. And so that's why things like the burn, it's like, yeah, that's going to create a narrative, but that narrative doesn't help. It doesn't help us be the most competitive DEX in the market, in my opinion. The things like the affiliate rev share, it's just people seeing how much money Ledger is making and saying, well, I want a piece of that. Well, it's like, well, what did you do to deserve that? Did you build a multi-billion-dollar company and like market your services and build a user base like that? You can't put a value on that.
Yeah, I mean, I do think like, and I totally agree with you. I think a little bit the burn narrative is overhyped, but I guess the reason I do kind of like it is that once we do tap into these like millions of users, like there is a baked in ruin upside, which is nice for the community. But I agree, like at the like technically speaking, day to day, like the burn, it kind of reduces participant yield actually, which I don't think is necessarily that great in the short term. But once like the fire hose really turns on, I think that's where like the major benefit comes into play.
Totally. Yeah, we have a moat right now. We have early mover advantage, and we have to do everything in our power to defend it.
For sure.
Cool. Actually, one more thing. We never talked about base at all. You guys have an update you want to share on base?
Yeah, base was ready to go. We were thinking about getting it in before the V50 upgrade, which brings COSM WASM support. We ultimately did not decide to do that because of how there's basically just a dependency conflict with the version of the library that can read and decode base transactions, which we did not find until we went to go test it on StageNet. And then we realized that actually that upgrading to V50 fixed that dependency. So we just decided to slate base after V50. So what we're most likely going to see happen is once V50 goes live on StageNet, then the app layer team is more or less completely unblocked to start building out the app layer, actual front end applications and doing all the testing and starting up their marketing machine. So then we'll probably have a couple of spare cycles on the base layer side to start shipping more of the work that had to get delayed, which was the EDDSA vaults, which unlocked Solana, and then also being able to ship base. So what I think will happen is we'll see the V50 release go out at the end of this month. That'll be a major update. Also testing the new upgrade functionality. So that's just like, we've got our hands full with that right now. As soon as that is shipped, clean bow on it, we'll release base in the subsequent release. And then at any point between, then and when the Ruji team is, that will again take priority. If that takes longer, then we'll just continue shipping on the EDDSA and Solana timeline. So that's kind of a preview of like just I think the next like 2 months of work that lays ahead. So yeah, it's massive changes to the architecture, new chains, and then yeah, the active yield stuff. I'm excited to start working on that in the new year as well.
Cool. Any closing thoughts from anybody? There's no more requests for people coming up. Oh wait, sorry, we didn't even get to FinBlue. Sorry, I put you up here. My bad.
Yeah, I just want to say kudos on the Ledger Live, but apparently there are still a lot of people out there that use Ledger Live, um, and obviously there's been 3 or 4 other really big integrations over the past 6 months or so. Curious if the pipeline of the really big integrations is still pretty full, or if you're kind of running out of them.
Sorry, what was the question there?
Sorry, I guess I was breaking up a little bit, but the short question is that there have been a lot of really big integrations over the past 4 months: OKX, Ledger, LiFi, etc. is the pipeline of really big integrations still pretty full, or are you kind of running out of some of the big players that are interested?
I would say the pipeline is still very full. I think the sales cycle for these big integrations can be quite long, but I do think it's shortening over time. I mean, we've seen, yeah, as you're mentioning, just like really massive integrations landed right up like one after the other. And so I think it's kind of a cyclical game, right? I think it's like we landed, 3 or 4 really massive ones recently, and maybe it'll take a few more months to get to the next ones. But the pipeline is absolutely full. We're having conversations every single week, and we're not stopping at the wallets. We're not stopping at DEX. We're going for everyone. So you can be sure that we're continuously expanding the circle of people that are kind of in our purview.
And Ledger
Also-
is signal. Like Ledger is big signal to other big wallets and like everybody else. Like Trust is like, all right, there's one wallet that uses us for swaps. Now it's OKX and Trust and Ledger and BitGet. Like that's a crazy amount of users on those wallets, and they're big brands that use and trust THORChain's brand and services. So like us being in Ledger is like I think of it like integration dominoes. It just gets easier and easier to tip the next one based on like how much like weight is behind all the previous ones. Sorry, Pluto.
Yeah, I was also gonna say shout out to the SwapKit team. I see Oleg is here. Yeah, I made a post that was like, oh yeah, Nine Realms is the biggest or is the best BD team in crypto or whatever. It's not just Nine Realms. It's a group effort. It's like it's SwapKit team. It's everyone, all of you in the community that had been hounding Ledger and on Twitter, in their replies on every single tweet they made for months, like being like, when THORChain integration, like that stuff, it can get a little annoying, brigading a Twitter profile, but like it definitely helps, and it's a huge kudos to everyone in the entire ecosystem. It really was like a group effort landing Ledger, and we're seeing the results now, and yeah, SwapKit's just like a world-class team. So
yeah, the Ledger team brought that up to me specifically. Like they see all that, and like it definitely moves the needle, especially when there's like a really strong community behind doing these integrations. So putting like our weight behind like all the integrations that are yet to come, like all the big wallets that we still need to land, it definitely helps when people ask them specifically for it, especially a lot of people. It's like obviously don't like raid anything or like derail anything, but at the same time, like they notice, and it does make a difference. Like it's probably the reason why we're in Ledger today is because of just the community effort to get it there.
hell yeah.
All right, sounds good then. I think that's everything. We can probably wrap up unless anyone's got anything else to say.
Mm-hmm.
Sounds good. Onwards.
Cheers, guys.
Cool. All right. Happy Friday. See you.
Peace.
Have a great weekend. Bye, guys.
Bye.
Bye, guys.